Everyone has been scrambling to find any sort of stable yield for their savings after things like Singapore T-bills and Singapore savings bonds have seen yields touch multi-year lows. Enter the LionGlobal Short Duration Bond ETF, which is offering a weighted yield to maturity of 3% and just listed on the SGX on Monday, the 29th of September. So here are 5 things investors need to know about this bond ETF. Before I get started, why should you listen to me? Well, I'm Tim from Tim Talks Money, and I spent over 15 years in asset management and private wealth in both Hong Kong and Singapore. So for no BS take on all things money and investing, give me a follow. Number 1, active ETF. This is an actively managed ETF in that LionGlobal portfolio managers are trying to outperform a set benchmark. In this regard, their benchmark is a 3-month Singapore overnight rate average, or SORA, plus 0.35%. With the SORA currently sitting at close to 1.5%, it's aiming to deliver a yield of at least 1.85% or more. Number 2, lower management fee. Now, the LionGlobal Short Duration Bond ETF is actually based off a fund equivalent that's already available to Singapore investors in the fund or unit trust form. But the ETF is going to be exactly half the cost of that. It will charge a management fee of 0.25% per annum versus 0.5% per annum for the fund equivalent. With transparent pricing and real-time trading of the ETF, that's just one more reason to prefer the ETF structure over the fund form. Number 3, quarterly dividend payouts. Now, the ETF will pay out a distribution at the end of every calendar quarter. So on or around 31st of March, 30th of June, 30th of September, and 31st of December each year. For me, that's a nice touch given the scarcity of quarterly distributions in Singapore. Number 4, currency hedged into SGD. Now, the ETF will have 99.7% of its exposure in SGD through currency hedging, with broad diversification to both Singapore and global short maturity bonds that have an average credit rating of A-. As of the 31st of August, it had over 40% of its exposure to Singapore, with France, Hong Kong, the US, and Saudi Arabia the next biggest exposures. Finally, number 5, available in both SGD and USD. Now, the ETF is available in both Singapore dollar and US dollar share classes, although I don't see any reason why you'd want to purchase the US dollar version. Either way, the Singapore dollar share class is trading under the ticker SBO, with the US dollar share class trading under SBV. So there you have it, 5 things you need to know about the LionGlobal Short Duration Bond ETF that's just launched in Singapore. For more real money and investing insights, do give me a follow here or subscribe to my YouTube at Tim Talks Money.